The stock for Hyperscale Data Inc., trading under the ticker GPUS on the NYSE American, is currently priced at $0.3470 per share as of 12:10 p.m. EST today, November 11, 2025, reflecting a loss of approximately 1.85% on the day. Now, most investors looking at a stock that is trading well below $1, a stock that has seen its value plummet more than 90% over the last year, with a 52-week high near $10, would likely assume they're looking at a deeply distressed asset, a classic penny stock with thin operations and an almost certain path to delisting. That is the common, grim expectation. But the deeper reality here is that this company, through its very unique and very aggressive pivot, has established an estimated net asset value per share of $0.47 and total assets of $1.02 per share as of the end of October, figures that suggest the stock is trading at a significant discount to its own reported book value. This is the central tension in the Hyperscale Data Inc. story. A penny stock price hiding a balance sheet that, on paper, should provide a cushion and a path for an enormous potential swing in value, if the market ever decides to truly believe the numbers and the new direction. This disconnect is what demands a closer look. The general market narrative surrounding Hyperscale Data Inc. is one of extreme volatility and a highly speculative business model. It's perceived as a former holding company that has been scrambling to reinvent itself, jumping on the latest trends to stay afloat. The pivot from a diversified, somewhat unfocused entity to an AI data center company anchored by Bitcoin sounds like a pitch that's almost too perfect, which naturally breeds skepticism. We've seen this play out with many microcap companies, and the results are often disappointing for long-term holders. But here's the contrarian take. The recent dramatic financial maneuvers have given them a cash and digital asset position that is unusually strong for a stock trading in the 30-cent range. The expectation is low float, pump and dump volatility. The reality is a balance sheet now heavily weighted with liquid assets, primarily Bitcoin, which is a calculated strategic choice designed to leverage the volatility of the crypto market against the operational build-out of their AI infrastructure. The completion of their $125 million at-the-market equity program in early November is a key piece of the puzzle. While an ATM offering is usually a cause for immediate concern due to dilution, and it certainly contributed to the pressure on the share price, with over 255 million shares sold, it did exactly what it was supposed to do. It significantly strengthened the balance sheet. They raised the capital needed to fuel their new direction. Looking at the recent stock movement, the intraday price action today is consistent with the downward drift we have seen since the massive dilution from the ATM offering. The volatility, indicated by a historical beta of around 2.53, means daily swings are often sharp and disconnected from broader market sentiment. The trading volume, which has been high in recent weeks, including a volume of nearly 11 million shares traded by midday today, reflects a constant battle between large sellers, likely those participating in the ATM or simply booking losses after the steep long-term decline, and opportunistic buyers who are accumulating shares near the 52-week lows, which are currently just below $0.32. The immediate pressure is clearly related to this recent and necessary capital raise, which is the immediate reality. The long-term expectation, however, is hinged entirely on the successful deployment of this capital into the two core areas, the AI GPU cluster expansion and the continued Bitcoin treasury accumulation. The core business structure of Hyperscale Data Inc. is complex, a legacy of its former identity as Alt Alliance. It is now a diversified holding company focusing on technology and finance through segments like Sentinum, which is their Bitcoin mining and digital asset arm, and a focus on AI infrastructure. The AI side involves building out a high-performance GPU cloud service, specifically mentioning the launch of an on-demand NVIDIA stock GPU cloud from their Michigan campus. This is a direct bet on the secular growth of artificial intelligence, a strategy also pursued by many high-flying companies like Tesla stock and Apple stock, albeit on a much larger scale. The other side is the aggressive Bitcoin treasury strategy, which is the immediate financial anchor. Their goal is to reach a $100 million digital asset treasury, and they recently reported that their holdings have grown to approximately $75.25 million, representing a substantial portion, about 66%, of their current market capitalization. This strategy essentially turns the company into a levered Bitcoin proxy, much like other prominent digital asset firms. This is a crucial detail for anyone using online investment tools or a more hands-on approach with an individual brokerage like Fidelity or even platforms like Robinhood to understand. You are investing in a company whose fortunes are now inextricably linked to the price of Bitcoin, in addition to the highly speculative success of their AI data center business. Institutional activity is notably low, which is typical for a microcap stock, particularly one trading below the $1 threshold. However, recent 13F filings show some institutional names, like Vanguard Group and Stifel Financial, have small positions, often related to index or algorithmic tracking, but the net institutional accumulation is very modest relative to the daily volume. Insider buying, on the other hand, has been present, with Executive Chairman Milton Todd Alt III actively purchasing shares in the $0.39 to $0.45 range in the prior months. Insider purchases, especially repeated ones from an executive, can often be a strong signal suggesting that the people closest to the company's financials believe the public market is heavily undervaluing the stock. When the stock price is at $0.3470 and an executive is consistently buying in the low 40s, it reinforces the belief that the management sees a significant gap between the stock price and the underlying asset value, specifically the estimated net asset value of $0.47 per share and total assets of $1.02 per share as of the end of October. For investors who manage their own capital using a platform like SoFi Invest or the comprehensive services of Interactive Brokers, this insider action presents a concrete bullish data point in an otherwise very bearish price chart. The future outlook for Hyperscale Data Inc. is a high-wire act with three clear, critical catalysts. First is the Bitcoin price itself. Since a majority of their market cap is backed by this digital asset, any significant swing in the Bitcoin price will have an immediate and powerful effect on the GPUS stock price. The company is committed to a dollar-cost averaging strategy, which is sensible for long-term accumulation but doesn't shield it from short-term crypto market volatility. Second is the execution of the AI data center build-out. The promise of offering on-demand NVIDIA stock GPU cloud services is appealing, but they need to show material revenue and, more importantly, margin from this segment. It's one thing to buy the hardware, it's another to profitably compete in the crowded cloud services space. Success here would validate the hyperscale part of their name and move the market narrative beyond just a Bitcoin proxy. Failure, or even a slow rollout, will solidify the negative expectation. Third, and perhaps most immediately critical, is the company's compliance with NYSE American listing requirements. While they recently announced regaining compliance, a stock trading consistently below $1, particularly after a massive equity raise that may be viewed as a temporary fix, is always under scrutiny. A sustained move and hold above the key $1 psychological and regulatory level would be an enormous immediate catalyst. The risk profile is commensurate with the potential reward. The company operates with a significant debt burden and a concerningly low current ratio, meaning their financial flexibility is limited despite the cash infusion. The large share issuance under the ATM program has put a ceiling on the short-term price as the market digests that supply. Furthermore, the company's former business segments, like the crane rental operations, add complexity and potential distraction from the core tech focus. To truly see the stock price exceed the current expectation of a sub-dollar failure, the reality of the asset value must be consistently reinforced by operational success and, critically, by the price of their anchor digital asset. This stock is not for those seeking investment help through simple, automated strategies like a Schwab Intelligent Portfolio or even using Fidelity ETFs or Fidelity mutual funds. This is an extreme speculation on a high-risk, high-reward turnaround story anchored to the volatile Bitcoin market. If you are following this company, comment below with your thoughts on whether the estimated net asset value of $0.47 per share is enough to attract major institutional investors, or if GPUS needs a multi-dollar Bitcoin price increase to truly turn the tide. The core challenge for the company, even with its strong asset position, is to gain the trust of larger institutional players who would normally shy away from such a low-priced, high-volatility stock. They need volume from significant players beyond just the retail flow that we see on platforms like Robinhood app or those active on self-investing sites to sustain a higher price. The whole pitch hinges on the idea that an undervalued asset is hiding behind a high-risk profile. The expectation is low, volatile trading until an ultimate failure. The reality we have uncovered is a company that has aggressively recapitalized through extreme dilution, effectively converting its equity into a large, liquid, and market-linked digital asset treasury, which currently gives it an estimated net